Hi everyone, welcome back to another interesting video on daily market analysis and stock updates. In this video, we will be discussing about three major important updates we have from the market. Number 1, World Bank raising India's GDP. Number 2, JSW Energy stock. Number 3, Vodafone's fundraising program. We will discuss the complete details in this video. Before going to that, like this video and subscribe to our channel and also hit the bell icon. Now moving on to the first update we have from World Bank regarding India's GDP. The World Bank has raised India's GDP growth forecast for the financial year 2024 and 25 by 20 basis points, now standing at 6.6%. This revision comes on the heels of India's output growth reaching 7.5% in financial year 24, as reported by the Global Financial Institution. According to the World Bank, India's output growth is expected to remain robust, with activity in services and industries sector driving the momentum. The institution also highlights that South Asia's growth prospects remain bright, projecting a strong growth of 6% in 2024. This growth is mainly driven by India along with recoveries in Pakistan and Sri Lanka. However, the World Bank Vice President for South Asia, Martin Reiser, cautions about fragile fiscal positions and increasing climate shocks, which could pose challenges in the future. He emphasizes the need for policies that boost private investment and strengthen employment growth to ensure resilient growth. Franziska Onsoj, the World Bank chief economist for South Asia, points out a missed opportunity in fully capitalizing on the demographic dividend in the region. She suggests that if South Asia employed a share of working age population as other emerging markets and developing economies, its output could be significantly higher. The revised GDP projection from the World Bank follows similar upward revisions from other institutions. Just last week, Morgan Stanley lifted India's GDP growth forecast for financial year 24 and 25 by 30 basis points to 6.8%, citing continued traction in industrial and capex activity. The brokerage expects broad-based growth and narrowing gaps between rural-urban consumption and private-public capex. The Morgan Stanley also anticipates slow-paced fiscal consolidation, with the deficit expected to narrow to 7.9% of GDP in financial year 25. However, it notes that the key risk stemming from upcoming general elections, which could increase policy uncertainty. Similarly, S&P Global raised India's GDP forecast for financial year 24 and 25 by 40 basis points to 6.8%, expecting 7.6% GDP growth in financial year 24. Now, before moving on to the second update, like this video and subscribe to our channel and also hit the bell icon. Now, moving on to the second update we have from JSW Energy stock. In recent news, JSW Energy stock has surged over 2% to reach a peak of 558 rupees after the company announced plans to raise a significant amount through QIB, that is Qualified Institutional Placements or QIP. Qualified institutional placement is a process through which a listed company can raise capital by issuing equity shares or other securities to institutional investors. It's a common method used by companies to bolster their financial position. The floor price for JSW Energy's QIP has been set at 510 rupees per share, with the indicative issue price standing at 485 rupees per share. These figures indicate a strategic approach by the company to attract investors while ensuring a solid foundation for the offering. Despite the buzzing surrounding the development, JSW Energy has kept its cards close to its chest regarding how it plans to utilize the proceeds from QIP. This leaves room for speculation and anticipation among stakeholders. JSW Energy has been performing impressively, reporting a robust 24.36% year-on-year growth in consolidated net profit for the third quarter of financial year 24. Such positive financial indicators add to the allure of the company's offerings. As the detail of the QIP continue to unfold, all eyes remain on JSW Energy and its ambitions plans. Will this move propel the company to greater heights? Only time will tell. Now moving on to the third update we have from Vodafone Idea. Vodafone Idea recently received approval from its shareholders to raise 20,000 crore rupees in funds. This fundraising plan, approved in an extraordinary general meeting, that is EGM, held on Tuesday, aims to enhance both 4G and 5G services. Following the approval, Vodafone Idea's shares surged by 2.38% on the BSE, reaching a high of 13.98 rupees. The company plans to raise the funds through a combination of equity and equity linked instruments. The board of Vodafone Idea had previously authorized the fundraising plan on February 28 and had also empowered management to appoint various intermediaries for its execution. In addition to the approved 20,000 crore rupees, VI is also considering raising another 15 to 20,000 crore through a follow-on issue, bringing the total fundraising target to 45,000 crore rupees. The company intends to utilize these funds for significant expansion in 4G coverage, the rollout of 5G coverage, and capacity expansion, ultimately aiming to improve its competitive positioning and enhance the customer experience. Despite a narrowing net loss in Q3 of financial year 24 and a 7.5% increase in average revenue per user, VA faces substantial financial obligations. Its annual obligation from financial year 26 onwards stands at 43,000 crore rupees against an EBITDA of 8,400 crore rupees, posing a significant risk according to analysts. VI's funding plan had been pending for some time, with its promoters infusing 4,500 crore rupees in March 2022 to settle dues and fulfill repayment commitments. The government's conversion of interest related to deferred spectrum and AGR liability into equity was also a notable development. However, VI's debt remains substantial at 2,10,000 crore rupees, and the annual installment for financial year 26 onwards presents a challenging scenario. The much awaited capital raise is crucial for immediate liquidity and network expansion. The absence of these investments poses a risk for Vodafone Idea, potentially leading to a shift of premium subscribers to competitor networks and adversely impacting its network capability, consequently leading to elevated customer crunch. In conclusion, Vodafone Idea shares approval for the 20,000 crore fundraising plan is a significant development in its effort to enhance services and strengthen its position in telecom market. That's all we have for today. If you really like this video at any point of time, don't forget to subscribe to our channel and also hit the bell icon. See you in another interesting video tomorrow. Until then, stay tuned to Financial Radio.